Hi, I'm Victor. I'm an active value investor and I like recording videos on companies that I invest in. Today's video is going to cover Airbnb. This is one of my favorite companies to track. I owned a couple of vacation rentals for over 9 years and used Airbnb quite a bit to rent our vacation rental company. I got to know the company and really started investing as soon as they became public and the price I felt was a good buy, and it's been a really good result. They announced their earnings today, and I wanted to go through their earnings, update my valuation models, and share with you my plan to either continue to buy shares in Airbnb, hold, or sell my position. I scorecard all my investments, and I like to stick to my process. It involves 4 questions followed by 1 action item. The first question, do I want to be in the industry? Do I really like how the company is being operated, and are they performing well? Is debt less than 3 times EBITDA? And I want a discount on the stock. Therefore, I can expect for my investment to go up in value. Based on the answers to those questions, I decide whether I should buy, hold, or sell this stock. Airbnb announced their earnings today, and man, they hit a home run. Just across the board, the company did great. Their revenue, 46% year-over-year growth on a very high now revenue level of 8.4 billion. Net income was really high. Excellent work. EBITDA, $2.9 billion. Excellent work. Free cash, $3.4 billion. Excellent work. Airbnb is a young company. They've been in existence around 12 years. They've been publicly traded less than 2 years. So for a company this young, growing this much, this fast, to be producing great free cash flow, profit is incredible. And that's why I own Airbnb. Great performance, Airbnb team. I value companies based on their free cash flows that I expect in the future, and I discount them to today's dollars. Airbnb provided that they generated $3.4 billion of free cash in 2022. So that'll be my starting point. And I'm going to grow that free cash by 30%. Again, they're growing their top line by 46%. They're really controlling their cost. They have a business model that is just incredibly lucrative for them. So I expect it to grow over years 2, 3, and 4, and then long-term growth at 4%. I believe that long-term growth is conservative, but I'm going to leave it there. A discount rate of 8.5%. They have an excellent balance sheet. Based on those factors, the company, based on my model, is worth $131 billion, but their current market cap is 76 billion. Their stock price, I updated it. It's really going up in after hours trading. So I try to get to a solid number of $133.90, which is what it's trading at. So it leaves a nice discount available on this incredible company, a 55% discount. Their balance sheet is in excellent shape. Their EBITDA, 2.9 billion. Their total debt, 1.9 billion. So they could pay for all their long-term debt in less than a year using their EBITDA. That's not even including cash that they have on the balance sheet. So a recap on Airbnb, the performance in 2022, just a great performance. Congratulations, Airbnb team. Just probably the best earnings that I've seen this whole earnings season. This is the #1 vacation rental company, so their brand is recognized better than all the rest. They have a massive total addressable market around the world. They're not just US based, they're growing very fast in Europe, Asia, Latin America, everywhere where there's somebody that wants to rent their home or part of their home or a second unit they have. Airbnb is exploding. For 2023 guidance, the momentum of 2022 is going to carry into 2023. I expect great growth on the top line of 25% or higher, and great free cash flow growth of 25% or higher. My long-term outlook on Airbnb, I personally own 2 vacation rentals for approximately 9.5 years, and I used Airbnb quite a bit to rent those homes. It's the #1 experience for both the owner and the traveler. It's a very profitable model. I got to know the company as a property owner, and I also use Airbnb when I travel as a consumer. So overall, they are a very profitable model. They don't have to own any real estate to be a part of the transaction, which makes it very lucrative for them to be in control of the reservation and make lots of money in each transaction and grow their business globally. This is the dominant company in short-term rentals. Everybody else is playing for potentially having 20% market share, if that much, because Airbnb tends to take close to 80% market share in true vacation rental markets. Their total addressable market is going to enable them to grow really fast for 5+ years. Keep in mind, some of the experiences that travelers want to take is to really stay in a community wherever they're going, whether they're going in Barcelona, Spain, or they're going somewhere in Africa or Asia or Mexico or somewhere here in the United States. The Airbnb experience is really preferred by many, including myself. And Airbnb really has the strongest brand and greatest momentum in the space at this time. So this scorecard is an easy one. It's a great industry. It's an exploding area of hospitality in the short-term rental space. This company is the best one on the planet. It's great to be a stockholder and a part owner in the company. Their balance sheet is in great shape. You're getting a discount on the stock, and I'm buying more shares of Airbnb. Thank you for watching the video. I appreciate it. I hope you found it interesting and you've discovered something new about Airbnb. Keep in mind, I'm not recommending you buy Airbnb. I record these videos to help other investors by sharing my experience in being a stockholder of Airbnb. Good luck investing in 2023.